Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to be talking about instrument selection and session opportunities that presented today. We're in a week that has had some big volatility and lots of news on the calendar. And today, coming into the U.S. session, I had no major red news other than the Bank of Japan monetary policy statement, which is always not listed at a specific time. So I'm always hesitant that they can come on at any point and affect the markets. And so as we get closer on a non-farm payrolls week, to the end of the week, I was expecting perhaps maybe a bit of volatility, but maybe more consolidation, and then tomorrow seeing a big explosive move. And again, I had no major red news on the calendar other than the Bank of Japan, and I see unemployment claims at 8:30 was orange, but I don't typically tend to pay much attention to news other than major red news. So coming back to instrument selection and then session opportunities. Today, traders had several opportunities in each one of the sessions. And again, I come back to something we talked about yesterday was markets that are in balance and out of balance and the day count, and understanding that most breakouts fail. We had a market on Tuesday that closed out of balance on the Japanese yen and gave us day one breakouts, and then proceeded to break out on Wednesday and trigger day two longs into the market. And that market eventually broke down and failed in our US window and then pumped up into the close. So again, we had a market that broke out and stayed broken out on the close, but understanding that this level is still significant because into the close of the day, we broke down below the high of Tuesday. And then the market pumped up. And this is a textbook pattern for people trading Asia. If you start to recognize this pattern into the close, longs that went long off the low of the day in the U.S. session, we'll zoom in on this. The market ends up closing as a long day, a green day. And we'll also notice that the market pumps up from the peak formation reversal, 1, 2, and 3 levels of rise. The key is understanding that it has moved at least 75 pips from the low, but I often will count that bottom 25 as the peak formation. And that's where they lock in the low, and then we have 3 levels of rise. So this market gave an excellent opportunity in the Asian session in that 7 p.m. New York time window for an easy collapse. So again, understanding that this is a setup that breaks down on the backside and meets our 5-minute criteria right at the 7:05 p.m. We have our lower high, lower low, the break in structure, the pump and engulfment for the vertical short trade into the higher level longs in that middle 25 pip box. So again, counting the 3 levels. And then the peak formation, the breakdown into the new day. So front side, back side. You will see this trade a lot in the US Asian rollover. Again, hunting not just the Japanese yen, but identifying the pair that gives you this best opportunity. So coming back to the setup, we had day 2 longs in the market that broke down and failed. So this, to some degree, has a lot of similar characteristics to a first red day. Although it closed above the open, peak formation high first that breaks down and closes down underneath of the London peak formation high. So again, the setup potential is there. It's a matter of then price action completing the entry pattern. So coming back to today, so we have a broken down market now, and traders ask, what do you mean by broken down market? A market that was going up and then it breaks down. So the front side of the move is now over for this time being. We don't know if it's over permanently or not, but we just follow that process down. We have a down move that steepens and breaks down below the original breakout, and then pumps up and breaks down with a lower low and pumps up into the Asian Open and breaks down again. Lower lows, lower highs. Now we're on the front side of the down move. Breaks down and makes a low into the open of the London session. And I hope traders are seeing the pattern here, because if we just go back to our universal 5-minute entry criteria, all this is now is a downtrend. And into the new session, they pump up and break down. They pump up and dump it down. So we have a market that, if we go back to our first chart, again, we'll just walk through a few examples of identifying the best pairs. We now have a market that's broken down. And so the question that traders, I always say now, just because you're at the higher low of the day does not mean that you're just going to buy because you're down low or sell because you're up high, because we could still be in a market that is tracking all the way back down. I have no idea, but it has to do with how price behaves. So again, I'm looking for the instrument that potentially has the best setup. And as I mentioned, Bank of Japan tentative announcement of their new policy, I'm leery when that is on the table, because I don't want to get in front of anything that could be explosive. It may look like something and all of a sudden they utter something and bang, it goes in either direction, and it's just not part of my thesis to gamble or speculate into anything that has uncertainty. Swiss franc, though, caught my attention because, again, a broken down market, thesis being that this could pump up and dump. Again, I was caught off guard. I was sort of focused on gold and not expecting any sort of major volatility because I did not see any major red news on my calendar. Canadian dollar, again, we're in a market that had day two breakout traders in the market. So we had our day one longs closing up high, day two longs closing up high and out of balance again. But then the market made a lower high and a lower low heading into the US window. Lower high, lower low is the formula for the pump and dump. We had a lower low, lower high. The pump and dump, again, not really on my radar. I was sort of just mainly focused on gold. And then realizing we had a explosive response to the unemployment data. First bounce gave traders an easy 25 plus depending on where they exited this trade, again a 1-bar stop. Now this market, funny enough, failed at where Wednesday's breakout occurred. So again, understanding the importance of the high and low area. We have a market that's day two longs in the market, wasn't able to follow through and break out before breaking down lower lows, lower highs, pump and dump, but then the market found support at that breakout area. Breakout, pullback, continuation trade. Oil, this is textbook. Again, noticing we have day two shorts in the market and day two shorts, but you'll notice this pattern of trap volume below the breakout out of balance is a dead giveaway. And so we have a market that's broken down, and I will be watching this tomorrow, and I'll tell you why. We have a market that's out of balance and broken down. We have volume trapped down low. This higher high to the high of the day and then the collapse down is a break in structure on the inside. So we potentially now may have a market that is poised and setting up for some kind of reversal and may not do anything. It's all about how price behaves when it gets to that level on the next day. But we have day three breakouts in the market. We have volume that was trapped down low. They've broken structure on the inside and dumped it down. So I will be watching this to see if we have some kind of setup that pulls back inside or taps the low or gives us some kind of short squeeze opportunity, if indeed that does present, because we could see an explosive move on oil heading back up. Now I want to talk about this. I posted this in the community post tab because this is something to look for to recognize days of possible huge opportunities. So previous days highs and lows are important, but you'll notice one thing if you study the indexes, they tend, especially the S&P, it tends to respect major quarterly levels, as does oil. But when you have a previous day's high and low that's inside of a quarter level, that's when we can see a potentially narrow range choppy market. But when we see markets where the daily highs and lows are outside of the quarterly areas, we have the opportunity for explosive moves because the market will tend to hit one of those sides. What that means is that the potential range for movement is greater than 250 pips. When it's inside like this, it can stay trapped inside and it can be quite wicky and volatile. And today was one of those days where we had a high-low outside of the major quarterly levels. So thesis being is that if it did explode to one side, that it could roll over to the other side. Now, I also posted that this market had lots of room to move. So you'll notice they keep you inside, but eventually they explode to one side. On a day like this, it doesn't take much for them to hit one side or the other. When we're inside of that, they explode out. They kept it coiled before exploding up and then collapsing. And this market had a lot of space below. And we'll just zoom in on a couple key areas. It had not taken out clearly. It had spiked through the lows, but it hadn't taken out anything below this level, where that bullpen spiked up. And we'll just draw this little area of space. We had a lot of space for this to be able to collapse through, which I mentioned. Now, obviously, there was space up to the breakout level as well, but the first area it had to get through was yesterday's high of the day. Once it broke through there and rolled over, which was a little bit later in the session, but for traders, obviously, who are trading that full session or the later session in S&P, this is a huge collapse. Now, if we go back to our numbers and just take a look at that chart, we have a market that now is potentially going to give us a range expansion of that 250 pip box. Put our bodies on today's, body on today's. We've done two full expansions of that range as a area where that market is potentially now closing as we're pretty much at 5 o'clock. Now, the easy money trade was in the London session. So when we come back, we have the higher high on the inside and then the dump and pump into our London open with coiled squeeze for the explosive move back up through the high of the day. And that's free money, this nice coil. Now, I wasn't expecting this to explode as it did. My thesis originally was that we might see this market pump up to the high of the day and then break down. And the reason being, again, is that payrolls, I thought we might see this market push up and possibly roll over and maybe even roll down later towards the low of the week or even the low of the day. So a bit of again, the trap longs come down, trigger the low of the week, and then go into consolidation, setting up for a large move on payrolls. Again, I didn't think any data was on the table. Well, obviously I was wrong. Pattern, higher highs, higher lows. They clear out the higher level longs, the ramped up volume, heading into that US window, chasing the trend, coming down in 3 pushes. And this was set up to go right off the bat. So obviously poor preparation or just not being switched on today. This gave a textbook opportunity for an explosive move. Now, if we come back and look at this as one large rectangle, this is a big bottom W reversal possibly that is formed, and using body to body, which is a 100 pip box, this has a projected range expansion of 200 pips roughly, which could take this up into the short trade from the London session on Tuesday, which as soon as this broke out, I've missed the first bounce. We'll zoom in on that. This coiled sideways price action heading into the new hour, just prior to the new hour, is a dead giveaway because we did not take out the high. And I saw this as a big coil getting ready to explode. This is an awesome first bounce opportunity, which, again, I talked about in the short this morning. The reason I call it the first bounce is I'll take the first bounce, but I do not chase anything else. And as soon as it broke out, we have an ascending triangle here just in this pattern itself. There's a minimum measured move that was targeting up in that 340 area, and I just was leery. I knew at some point this could roll over, but again, I just didn't care. I didn't even want to look at it after that. Little bit of an opportunity on the front side heading into that to be part of that move, but it just took me off guard, and this market eventually did drop and roll over. But as we see, a bit unpredictable after that. We're going to have obviously a close out of balance. And heading into payrolls tomorrow, we have day one longs in the market, in and out of balance market. We could see anything happen. So tomorrow, non-farm payrolls. Focus on protecting your downside. Stick with the easiest, best trade setups, if indeed there are any that present. And if not, do not chase anything. Do not chase price. Focus on being able to lock in something that's easy, that's going to move in your favor quickly. Take what the market gives you. Protect your psychological capital. Don't sit at the screen for hours. Have a rinse and repeat setup. Lock in the money. Get off the screen. Finish the week strong. 1% better every single day, traders. And may the markets go with you.